Thackray. He's a research analyst at Global. Brooke, thanks a lot for joining us. What are you seeing in the credit markets?
Well, the credit market, the spreads between government bonds and corporate bonds, in this case BBB bonds, which are the lowest form of investment grade bonds, is very, very narrow. In other words, investors are demanding a very small premium for corporate bonds. This is, you typically would see in a risky situation, they say, well, you know, we want a higher premium. We want 4% or whatever. But right now it's around 1%, which is extremely low. So bond investors don't see a risky economic situation at this time. And usually what you see is you'll find that the spreads will start to pick up before you start to head into economic problems. And we're not there yet. If you look back at 2000, 2001, in that area there, you saw the credit spreads pick up well before the recession. And we saw the exact same thing happen in 2008. And you can see the bars there, that gold bar represents the recession. And that line represents the credit spread. So when that line's rising, that means the spreads are getting wider, which means investors are demanding a higher premium. They're saying, well, we have to have a more yield coming out. And that's what you find in tough economic times. And you saw that in 2007, 2008, as that recession started to develop.
Credit spreads would be one way of gauging risk appetite. Is that a fair way to describe it?
Absolutely, yes, absolutely. And we haven't seen that rising of the credit spreads here. They're extremely low. So that means that the risk appetite is very high at this point.
What is your call on markets into 2025? Do you think equity markets can push higher again?
Well, right now, we're not seeing any signs that they're going to have some trouble. I mean, the big question is all around the execution of Trump's policies. What will get executed, when it'll get executed, and that makes it a little bit tough. We've seen a solid year this year for the Canadian markets and the U.S. market, up over 20% for the S&P 500 twice, 2 years in a row, which is very unusual. So we may see a backfilling along the way here and a little bit of volatility as well. I think we are going to start to see the market stumble in a bit once we get past this honeymoon period after Trump's elected. And he's going to try to do a lot, but it's going to be a little tougher than what most people expect. And I think that we could actually start to see the market start to stumble, perhaps late spring, summertime.
There's all kinds of focus on earnings, with the multiple on S&P 500 companies being stretched at 22 times, I believe. A lot of focus is on earnings. Can earnings catch up to those multiples? And I think earnings expectations are for earnings growth of between 13 and 14%, I believe, on S&P 500 companies. What's your take on the importance of earnings and whether we can get there or not?
Well, the earnings are very important over the longer term on a fundamental basis, because you need to see the earnings come through for earnings per share for companies to produce the profits, which obviously drives the stock price over the longer term. I mean, obviously there's going to be disconnects along the way here, but I think that we're going to start to see some sort of compression. What we don't see right now is the margins that corporations have are extremely high at this point. And that's partly been because of this pandemic recovery that we've seen. We've seen prices have been able to be, companies are keeping them extremely high at this point, so we're making tough margins. But if we start to see unemployment tick up, it's going to become more competitive, and we're going to have to see prices have to adjust on that. So I do think the risk there is on the margin side, which would lower the corporate profit. So I think they're being a little optimistic on corporate profits.
The other thing is, have markets, the other question to ask is, have markets priced in whatever benefits might accrue from the Trump administration, this pro-growth agenda that he seems to be bringing to the White House?
Yeah, I think they have. I think if there's a lot of optimism that everything can get done, and it's going to be tougher. But let's go back and take a look at when Reagan was elected back in into 81. You know, in 81, the stock market was negative, as he was introducing tax cuts and deregulating, and we saw the economy move into a recession at the same time. So it's not like all of a sudden everything's going to be positive right away. And I think that some of the plans for reduction in government spending, et cetera, are positive long term for the economy, but it's just going to be a tougher road than many expect.